Moving into the final months of this year, investors will need to navigate a difficult market environment as global policymakers try to steer their economies through a complex transition to the next stage of recovery. Investors must now navigate a delicate environment where the world economy continues to expand, but more slowly, while major central banks, including the Federal Reserve, start to scale back emergency stimulus programs. US fiscal policy will also be a key driver of markets over the coming weeks, and this is complicated by difficult domestic politics. Congress must agree to raise the US debt ceiling by mid-October, or risk a government shutdown and debt default that would hurt investors' confidence. The path to eventual resolution is likely to be bumpy for investors, given the standoff between Republican and Democratic lawmakers over the Biden administration's spending plans. In China, concerns over contagion from China Evergrande's financial distress will continue to be a source of near-term uncertainty in markets. Our view remains that Chinese authorities will act to limit wider damage to the financial system and economic stability if they see a risk of disorderly failure. Meanwhile, higher energy prices and rising US Treasury bond yields are also forcing investors to re-examine their positions in risky assets that are sensitive to inflation and higher interest rates. Overall, although markets are more volatile, we think an investment strategy with a moderately risk-on approach will still be rewarded in the coming months. But we do expect returns to be lower than in the early stages of the recovery, and short-term corrections are likely. As we begin the fourth quarter, we stay overweight in equities in our asset allocation strategy, with a preference for US equities. In fixed income, we remain overweight in emerging market high-yield bonds, where valuations still look attractive. But we are underweight in both developed market and emerging market investment-grade bonds, as these segments face greater headwinds from rising interest rates. For more information, please read the latest edition of our monthly investment guide titled The Final Countdown.